2020 has been nothing short of a roller coaster ride for municipal investors. For the first 9 weeks of the year, bonds were doing exactly what they were supposed to do. They had positive returns, they were offsetting equity volatility. Then we ran into the middle 2 weeks of March, which happened to be the two most volatile weeks in the municipal market ever. And then since the end of March, bonds have rallied nicely. They've rallied to an extent where high-grade yields are now at or through their all-time lows. And if you look at it from a relative value standpoint, if you looked at a AAA rated yield relative to a US Treasury yield, municipals are expensive to varying degrees. So there is concern out there with investors. So what I'd like to do is provide a quick checklist. 3 items, let's not complicate it, of what an investor should look for when they're choosing a manager in today's environment. Now, number 1, choose an active manager. We'd like it to be us. But if it's not, you're taking a step in the right direction, because your alternative is to passive ladder type of portfolio that's yielding 50 to 90 basis points depending on the structure. Or you can move into an active manager that's yielding a little bit more than that, let's say about 1%. Or you can go to us that we're yielding in and around that 1.7, 1.8 range. So active manager today is more important than it has ever been. The second thing on your checklist is, with that active manager, make sure that they have the flexibility, that they have the structure to see themselves through this environment. And what do I mean by that? Just ask a simple question of your manager. What in your mandate do you have that will protect my assets? It's a very simple question. We just talked about municipals being expensive. What do you do with that information? If you're a muni manager and that's all you do, that's all you buy is muni bonds, you're going to ride that bond up, down, sideways. We have flexibility in our mandate. For example, we can cross-market trade, meaning I can go out and buy US Treasuries. So for those expensive munis, let's sell some of that. Let's take some of that down. Let's take it off the table. Reposition into Treasuries, waiting for muni yields to back up, which inevitably they will, becoming more reasonable, and then we rotate out of those treasuries back into municipal bonds at higher yield. It's not rocket science here, but it's a thoughtful approach. And what that does is preserve the gain, reduce volatility. And what about credit? The hallmark of a municipal bond portfolio are AA and AAA rated bonds. We get it. But what about owning some single A and triple B? There's a time and a place for everything. Don't do your research through headlines, through the newspapers. Our analytical team, they scrub every bond that we buy. We're comfortable with it. We buy it single A, triple B, without undermining the integrity of the portfolio. And it's been a phenomenal trade so far for our clients. And number 3, innovation. Look for a manager who's innovative in this changing environment. Right? We're an innovative manager here at AB. Our AB Muni platform is varied in its complexity, varied in what we offer. Now we're innovative from a technology perspective. And what do I mean by that? Well, the municipal market is highly fractured. And the 2 of the biggest complaints I hear are from advisors who can't find enough bonds and investors who claim that their bond portfolios are not being invested fast enough. So we have proprietary tools here that are leading the industry in that we can sift through the myriad of bonds, the fractured bond market, find those bonds, we get a holistic view of the market, get to those bonds faster than anybody else. We get to those bonds faster, bid on those bonds, get a better price for our clients, meaning lower price, higher yield, something known as speed alpha. And then with that, we can also build portfolios faster. You don't always want to build a portfolio faster, but in certain environments you do. And we can cut that back down to a couple of weeks in terms of building out a portfolio. So when you're looking for a manager, just make sure they're active, they have flexibility in their mandate, and they are innovative.